Hey guys, Darin Marques here today to tell you the luxury market is still on fire. Yes, it is. Now different price ranges, but I want to tell you, I'm going to start off with the $3 to $5 million price range because everybody's asking right now what's going on in the market. And when we get offers from clients, they're saying, we know the market's slowing. And so your client better accept this offer. Well, let me just give you some real numbers to let you know what's going on. And so we're going to dive in first at $3 to $5 million price range. And last year we sold 27 homes between September, October, November. This year we've sold 25 homes between September, October, November. And big reason to that, I think it's still contributing, is we still have tons of California buyers coming in for tax reasons that are becoming primary residents here. And that's the big reason why we're still seeing that price range stay really, really strong. I want to dive into the other price ranges a little bit, 1 to 2 million mark. That's obviously where we've seen our most drastic reduction, because the majority of those buyers in that 1 to 2 million price range, a high percentage of those, are loans for two reasons. Either one, they don't have the cash available, or two, those were buyers that were buying up, meaning that they sold their home that they purchased for $500,000 or $600,000. They sold it in the last year for $800,000, $900,000, $1 million. And then they were able to buy up to that 1.5, 1.6, 1.7, especially with the lower interest rates. And so that has been the segment of the luxury market that we've seen hit the hardest. The 2 to 3 million mark, we saw 55 units sell last year, 33 units sell this year. Again, I think there's going to be a mix of that. As you get to the higher end of the twos, you start to see more cash. On the lower end of the twos, you start to see more loans. And so obviously, as interest rates go up, it's going to affect that a little bit. Now, the 5 million plus market has slowed a little bit as well. 13 transactions last year, 5 transactions this year. Now, I want to just give a comparison. Back in 2016, I believe it was, if I recall the numbers correctly, 10 $5 million plus homes sold in the entire year. So we're talking about the last 3 months. We've had 8 sell and 13 last year. Now, a big reason a big thing I contribute to why we're seeing a slowdown in that higher price point is, believe it or not, is a lack of inventory at the 5 million plus. So I pulled up for a client a couple weeks ago. We were looking in a neighborhood and we were looking between $4 to $7 million. And between that 4 and 7 million, there was 22 homes that were available on the market in that neighborhood. 15 of those were new construction, meaning they've not even come out of the ground yet, but they're listed in the MLS. 5 of those were dated properties, meaning that they need renovations and work done to them. And 2 of them were modern and what you would find today that clients want. But those clients are still hoping for the high price and priced extremely high. So that tells me in that price range, I think part of the reason we've seen a little bit of slowdown is just not the inventory that was available last year as people started to bring their homes onto the market because they knew the market was so strong. So, in my opinion, I think the luxury market we're going to see remain strong. This is traditionally slow months for real estate in general and for luxury, but we're seeing that it's still remaining steady. I can tell you just based off of activity that I have in one of my listings in Ascaya, we've had 3 showings in 1 week on a $7 million listing. There was another property in there that was listed at $5.4 million. I think they had 10 showings in a week and 3 offers, went under contract. So that high price point, 5 million plus, even the 3 million plus, still remaining relatively active compared to what we've seen over the past few years. And I think it will continue to remain active going into the future because, like I said, California tax law is not changing anytime soon. We have a large amount of California buyers that are flooding here because of the tax purposes and the tax savings. And I think we're going to continue to see that over the next several years. So anyway, guys, I'm going to remain optimistic about the luxury market. Yes, on the lower price points, we've seen that come to a screeching halt. Listings that we have that are 400, 500, 600,000. We've seen 1 to 2 showings a month. And obviously that's not going to change until we see interest rates drop lower. The one thing I will tell you that I think that we're going to see come first quarter, which is going to be surprising to most, and we're already starting to see this, is a reduction in inventory. We've been seeing over the last 4 weeks about 10% a week drop from what we were seeing. And the thing that's going to contribute to that the most is you got to remember that probably 80% of the clients that are on the market selling their property are not in a position where they need to sell. They were in a position where they could sell and profit greatly. And now they're electing to go ahead and pull the home off the market and just wait the market out until it returns to the way that it was or interest rates drop or whatever. And so now we're starting to see a lot of people pull those homes off the market and not a lot of new people putting those homes on the market. So I think we're going to see a reduction in inventory and probably even a shortage in inventory come first quarter. So hopefully I'll be right. We'll check back in 3 months and see where I'm at and see what I really know. But hopefully this was helpful for you guys today. So remain optimistic about the luxury market. It's still going strong, and I think it will for quite a long time.